What's going on, everyone? Welcome back to Courtside Financial. If you're new to the channel, hit that subscribe button because NIO is well documented on this channel and you don't want to miss another video. Also hit the like button because that really does go a long way in helping out the channel. So today we're going to be talking about NIO stock. It is 12:32 p.m. Eastern time here in Michigan, and the stock is currently trading at $6.84, down 2.22% for the day. So if you're subscribed to this channel, then you know that I'm bullish and I'm long on NIO, but today we're going to be playing devil's advocate and taking a bearish look at NIO and examining the three biggest risks to shareholders when it comes to this stock, and just giving you guys some things to think about so that you can stay objective. As always, none of this is financial advice. This is just me sharing my research and ideas with you guys. It's very important to make sure that you do your own research and come to your own conclusion. Number one is that at this very given moment, we're not sure how a market correction will affect the share price. I'm assuming it's going to negatively affect the share price. I bring this up because a lot of people are assuming that just because NIO is a business that operates in the C country, which is recovering from these unprecedented circumstances faster than the United States, that a market correction will not affect the share price, which in my opinion is a completely wrong way to look at this. Remember that NIO still trades on the New York Stock Exchange. The Fed has been pumping liquidity into the market and slashing interest rates and savings accounts, forcing retail investors to chase the yield, dumping unprecedented amounts of cash and liquidity into the markets. I challenge you to consider what could happen to equity values, including NIO, when the money printing stops. Number two is geopolitical tension. The US Senate recently passed a bill that could cause a lot of C country stocks to be delisted. The bill requires companies that are traded on the New York Stock Exchange to quote-unquote prove that they are not controlled by a foreign government. Now obviously this type of thing doesn't happen overnight, so I wouldn't panic. You need to understand how a bill becomes a law. This could take many years. On the other side of the coin, I think that the world's two biggest economic powers need each other. Big companies like Google have a vested interest in the C country, so I'm expecting these big names to lobby against delisting of C country stocks. The last thing that you want to think about is dilution. NIO is a startup and a capital-intensive business. In order to keep growing, they will need more capital, and that isn't going to come for free. Now, Tesla in its early days has managed dilution well. They too issued more shares to raise capital for the business, which worked out well for shareholders and worked out well for the business, giving Tesla the capital it needed to stay afloat while also growing. NIO at some point will become supply constrained. The demand will eventually exceed the supply, and in order to meet the demand and scale, they're going to need more capital to invest in things like infrastructure to build those cars. I think NIO can handle the dilution in the same ways that Tesla handled the dilution, but it's important to keep in mind that we're still betting on a company with negative margin. So those are the three biggest things that I think investors need to consider when it comes to thinking about investing in NIO. Obviously, I'm long on NIO, obviously I'm bullish on NIO, and I think they'll be able to succeed regardless of these challenges. I want to know what you guys think. Please like the video, please subscribe, and comment down below.